Hi, my name is Sani Hamid and I'm the Director for Economy and Market Strategy here at Financial Alliance. Today I'm going to discuss with you a little bit about something we term shutdown risk. Shutdown risk basically refers to situation whereby during a virus outbreak, there could be a shutdown in terms of business activities, which result in an economic slowdown. This could actually differ from what we call very basic absenteeism from work because staff are sick, to maybe a group of staff who voluntarily don't want to come to work because they're afraid of contracting the virus, to maybe companies themselves deciding to shorten their opening hours because of a lack of demand, and sometimes even countries who will impose what we call mandatory quarantines, like what we're seeing in China. All of these leads to lower economic growth, the extent of which depends on what type of shutdown and the length of that shutdown itself. I've written about this in a report which was released on February the 7th under an FA note which is called Shutdown Risk Underestimated. Shutdown risk is nothing new. Shutdown risk was present in the previous two big virus epidemics or pandemics. In SARS itself, we can remember actually there was this whole apartment block which was shut down or quarantined, but there were about 200 residents in that block. So that is considered to be a bit of a minor shutdown in a sense. A slightly bigger one was during H1N1 when Mexico itself shut down the country by about 5 days, when the number of deaths there spiked up. So again, the shutdown risk was present therefore in SARS and also H1N1. The only thing now is with COVID-19, the shutdown risk that we are seeing is basically unprecedented. China to date has put roughly 500 million or 500 million people under what we call a certain degree of quarantine, some more severe than others. This in itself is a very large number of people. It's never been done. People are calling this the biggest quarantine in the history of mankind. It is equivalent to roughly about 6.5% of the world's population, and if you put it into scale, it's like putting the whole of North America under shutdown. So basically what we're seeing today, it's something which is very difficult to model because we've never ever seen it before. And when China shuts down, basically it is actually something which will impact the world. Because China today, it's a totally different economy compared to way back during the SARS period. During the SARS period, if you look at the chart itself, you'll find that China, for example, in terms of its share of global GDP, was roughly about 4%, but today it's up to about 16%, which is about 4 times more. China's export of goods itself as a share of global exports has also increased from roughly about 4% to again about 12%. So a lot of the Chinese numbers in terms of its size, you'll see that during the SARS period was roughly about 4% odd, 5%, but today it's about 12, 13, 14, 15, 16%. So about 4 or 5 times more. So therefore a shutdown in the Chinese economy will have repercussions not only on the Chinese economy itself, but inevitably on the global economy, because China is so entrenched into the global economy at this particular point. Shutdowns also are occurring because of COVID-19 elsewhere. We know of currently latest news of 10 Italian towns being shut down, roughly about 50,000 people within these 10 towns. There was recently a case of one particular worker in a Samsung factory being confirmed as having the virus and therefore causing the whole factory to shut down. And already the global car manufacturing industry, we've seen a lot of disruption, Hyundai, Ford, and so on and so forth, because basically the Chinese supply chain is present, whether it's 1%, 2%, 5%. As the headline correctly points out, you can't make a car with 99%. You have to have everything in place. So if there's one particular part which is missing, it then causes a whole disruption to the total supply chain itself. One thing we must remember is the shutdown has an impact on the consumer. When businesses start to close down temporarily, when the consumer starts to stay home and become worried and stop spending, then there is a repercussion. Because for the past 1 or 2 years, if you really look into the numbers, there has been what we call a manufacturing recession, where a lot of the manufacturing numbers have been weakening over the past 1-2 years. So what has held up the global economy has been actually the consumer himself or herself. As you can see from the chart, from one of the IMF's World Economic Outlook, you'll see that actually the consumer has been the one that's actually been keeping global growth afloat. So now the big question mark is the consumer being now what we call, in terms of a hit by the virus severely. Big question is can the consumer continue to do so? I think that's a big question mark there. So we really have to worry about the consumer, who is now basically the last pillar. And so when you remove that last pillar, I become very cautious about what to expect going ahead in the months ahead, because without the consumer, I think global growth itself, minus a very weak already very weak manufacturing sector, we could see a very sharp decline in overall global growth. So basically what we'll do is, in the next episode itself, we'll look into or dive deeper into what we call how bad can it actually be. So basically, if you would like to, please subscribe to this YouTube channel to be informed of further episodes that come online. So please do subscribe to our channel, and I hope to see you again soon. Thank you.